So I'm looking at this drop base drop fair value below on Euro USD, right? This would be a supply area. Like I was saying, we have this drop base drop with fair value below. Looking to enter here with 5 pips risk to target the low, right? Hopefully it triggers. I know the entries exact. In the meantime, I'll reanalyze your USD. This is also a 5-minute zone, so we have we in 5-minute right here. I'll probably just take an early entry. Oh, well, it does look like, yeah, it does look like it's gonna activate, so I'm gonna leave it where it's at.
George's University.
Right, so I'm in. I think after we penetrated the zone by 50%, so If it does come back into the zone, it's probably gonna break, right? So we want to consider going break even soon. I'm gonna put my stop, cut my stop in half. So I'm only risking half an R. So I'm gonna put my stop right here. 2.5 pips. Because I know if it comes back up, it's gonna go through, right? I'm gonna place this where it was, just to have it there, but my stop is at the red line. So if you're in the boot camp, then you know this setup. This is the setup that we practice every day in the boot camp at 11. And you can do this independently if you're in the boot camp. And if you're in the VIP chat, then this is just a good trade. We're already at 1 to something. This should be easy to go through, right? So we shouldn't really meet any heavy turbulence until we get down to like this level. Until we get down to that level, that's when like we might have a little pullback or something. I'm gonna move my stops to break even, right? So I place my stops at break even. And I think we could take an easy 1 to 3 take profit. Or you could take profit whenever you feel like. It could go lower, right? But usually 1 to 3 is like profitable, or 1 to 2. that should be. I think I'll just secure this, right? 1 to 1. Just because your USD been a little edgy today, and it penetrated the zone by 50%. So I personally took 1 to 1 because I already won a few trades today. But we'll see how this analysis plays out still though. If there's any pairs you want me to do a quick analysis on, we could do that. Just wanted to send this quick zoom for this scalp right here, right? Plus we're kind of high, right? Let's have a look. So this would be my top-down analysis on Euro USD, right? Basically, this trade that we was waiting on earlier this week, if you remember it, this was a trade. This was an amazing trade, right? But we didn't hold it. We should have, because this was like one of the highest quality trades. Just how it formed with the novice area and the demand. When I took this trade, it was like down here. If you remember, it took profits at 1 to 5, but you know, had I just left it, it could have been a 1 to 25. But that's okay, you know. Like over time, a lot of the trades run this far, but we've yet to be able to capitalize on a huge move. But you know, I know once we keep at it, eventually we'll unlock those moves, right? We're gonna unlock 1 to 25s and 1 to 30s and all of that, because you know I see it, right? But you know, I just end up closing early when it has the potential to go higher, right? So let me just give you my thoughts on your USD. Basically, on the monthly, we have reaction of monthly supply. Then we have reaction of this weekly demand, right? So this weekly demand been in control. When we come down to the daily, we don't really have much daily zones. If we look back, market just tapped into this weekly area down here. And then since then, it created this and you need to do top-down analysis, multiple time frames to really understand what's going on, right? It tapped into this 4-hour demand right here. After it tapped into weekly demand, it created 4-hour demand, it rallied up, came back, tapped into 4-hour, right? Then we had a rally up, and basically after we tap into that 4-hour, we had this 30-minute rally-based rally that been in control. The market came, tapped into that 30 minute. That's a zone that's been in control for the longest time, and it came back to this zone right here, right, for a second touch. And then after that second touch, it created this 1-minute zone that we've been waiting on for like 3 days, and it activated yesterday, right? We was waiting on this zone since Monday, and it activated yesterday, and it just went through the roof, right? And it was easy for it to go through the roof because there wasn't any significant supply until like this area, which it did still penetrate. So, now what we could do is we wait for the next qualified demand if we want to go with the trend, which is this drop base rally right here. It's kind of in the middle of, the novice area, but not too much, right? This is the novice area, but it's just a little above it. So this would make a good long for the drop base rally, right? When will it activate? Maybe today, maybe tomorrow, who knows, right? And this 1 minute that we just took was just a quick scalp, right? It was counter trend. It wasn't really with the overall market direction. But now, like with this information, the next step would be to just, okay, we identify where we would want to buy, right? And then we identify where we want to sell, because we want to know where we want to sell as well. And we have this 5-minute zone, right? This was a supply the market reacted to. So we had this 5-minute zone right here that was created November 13th. That is high quality, right? It's qualified based on our rules. And we already took a trade here, right? We took 2 trades here actually. We took this one on November 18th for 1 to 5 or 3, and then we also took this one, right? Now, because the market didn't penetrate the zone by 50%, 50% would be this gray line. That means the zone is still valid, right? And the fact that the market reacted to it twice tells us like that's evidence that supply outweighs demand at that level. So that's why we have this sell limit up here. If you look in the VIP chat, we have a sell limit up here to take this 5-minute zone, right? Now, before it gets to that 5-minute zone, we also have this rally-based rally on the 5-minute as well, right? And then on the 3-minute, we also have this rally-based rally, right? Right here. So we have these 2 zones that's qualified, right? Outside of this would be the recent and relevant novice area, the new novice area. So that's why we have a buy limit right here, right? We have a buy limit right here, and we cover this zone as well. That's sent in the chat. In the event that the market does get down there to target this high. And then we also have this 1-hour buy limit, right? So if this 3 and 5-minute hit stop loss, then we have a second chance with this 1 hour. And once the 1 hour hits TP, then you would make back your profit on this trade, as well as profit on that trade, right? So we know we took this and we took an early profit for 1-to-1, but it can definitely, go lower, right? Obviously, it has to go lower to hit our two entries that we're looking at. I already post these entries in the chat. So yeah, I mean that's it. We already took a quick profit. Could still go lower, but I prefer to. This is counter trend, so I prefer to go the trend. All right, so I prefer to buy lower because and the fact that the market penetrate this zone by 50%, that image represents to me that there's no more supply in the area. Like there's once the market penetrates the zone by 50%, the zone is basically used up. So, if it kept going, then great. But we know because the zone is used up, if it was to come back to this area, it is likely that it will continue higher until it finds more supply, right? Because we know all the market is basically goes from supply and demand. It basically just goes from it just goes from what they call it, orders to from basically orders to buy orders to sell orders, right? In simple terms. Let me just show you a quick chart of, a diagram that kind of just explains what we do. Basically, the whole idea of the strategy is you want to sell where there's supply, right? Majority of sellers are selling. Buy where there's demand. Majority of buyers are buying, and avoid the novice space where there's a lack of supply and demand, where there's a ton of at supply there's an imbalance. Basically, there's more sellers than buyers. At demand, there's more buyers than sellers, and in the middle is where there's equal buyers and sellers, so it can't really move the market. So this is what it would look like on a diagram, right? And this diagram is basically what we use when looking at the charts, right? So we just identify supply, we identify demand, we identify the middle where we don't want to trade, right? Also known as fair value or the novice area. So I'll end this quick Zoom call. It was just for this trade, and we're still waiting on these two trades, so we'll see what happens. We're waiting on this trade, we're waiting on this trade, and we're waiting on this trade right here. We did have a trade from last night. That's let me check it out. We have this that's running CAD JPY, and it's the same idea, right? We have supply, we have the middle, right, novice area, and then the market came up into the supply. I added in this one as well because there's a supply zone on this time frame on the 50 minutes, so I just placed a stop above it, just for extra protection, right? And then we have NZD USD. Basically, we had the 3-hour demand, right? And then we had the novice area, and all of this was aligned with the higher time frame, right? And basically, this is a swing trade, so we took a buy down here, and it's still running. Now the thing is, swing trades is a higher win rate with low risk to reward, right? So that's people count on most of the trades winning with swing trades. but it takes time to play out. And then scalp trades is like crazy risk to reward, but you're gonna lose more trades. But the money is made from when you hold the big trades, right? Yeah, so I mean that's it unless you have any other questions. See, Thomas just joined. I'm gonna do a quick breakdown for Thomas because he's a swing trader and he just joined the chat, right? So basically, let me just explain real quick how I identify a swing trade, right? We use the same strategy, but we just use it on a higher time frame. That's all. We just use the same strategy, the same concept, but on a higher time frame. We use the weekly and the daily to decide what direction we want to trade in, and then we use the 4 hour and the 1 hour for the entry, right? So, for this Euro USD trade that we took, I mean NZD USD trade that we took, it was like the idea was we had this market come into a daily demand right here, right? And you have to zoom out when you're doing your higher time frame analysis. So we had this daily demand, and if you understand the strategies that I use, you would know this is drop base rally, and all of this right here is the novice area on the daily time frame, right? So once the market tapped into that daily demand, which you could identify days in advance, you could either enter on the daily demand or you could go down to the 4 hour, because we know higher time frame in control now, right? So you go down to the 4 hour, and on the 4 hour time frame, this is how I found NZD USD. I saw this drop base rally, right? And whenever a supply demand zone is created, it has to accomplish certain things in order for it to be valid. So one of the things is it has to remove an opposing zone. So it did remove this zone right here. And it has to have a strong move away, right? It has to move away at least 3 times the size of the base. And then you have to have a qualified base, right? So I looked on all the time frames to see which base looked the best. So on the 3 hour, we had this drop base rally, right? And then we had recent and relevant consolidation above the novice area, right? So, this happened on Tuesday the 26th. We identified it Tuesday the 3rd, right? We understood the daily time frame is in control, daily demand in control. We look for our entries on this time frame right here, and then we just place our buy limit, right, which is currently running. That was the idea. That was the thought process for NZD USD, right? So this type of analysis. You would just because it takes a while for the trades to play out. You just do this analysis at night whenever you're free and whenever you're available. You just do this analysis and set your trades, right? For CAD JPY that we currently have running, actually I'll do GBP CAD, right? Because that was a great trade that we took. And swing trading time frames could be considered 4 hour, even 1 hour, but you have to do it in line with the higher time frame, right? So for GBP CAD, I started off on a monthly, right? I looked, okay, we're not at monthly demand. You want to draw monthly, you want to draw weekly, daily demand to know which direction the market trending in, right? On the weekly time frame, we didn't really have the market tap into no weekly demand, but we could clearly see this is weekly demand down here, right? Rally base rally. But we could clearly see the weekly bullish and the daily bullish, right? So we already know we're looking for buys. Now we come down to this time frame and we at the day we identify, okay, the market tapped into this daily demand. So when you're swing trading, you just want to know who's in control, meaning like is the daily demand in control or is the daily supply in control, right? We could see the market tap into daily demand. It removed daily supply, so we know daily demand in control. That means we're looking for buys, right? We use the higher time frame to identify the direction. And if the market happened to be at higher time frame demand and supply, then we could execute, but it's rarely there. So having know the direction, we just drop down to the 4 hour and we look for 4 hour demand qualified to buy, right? This would have been a demand zone. The market didn't make it back, right? Now, this could have been a demand zone, but that's not how I like my basis to look. So if we go down to the 1 hour, right? Because we executed this trade when the market was back here. When the market was here, that's when we this is what we was looking at when we found this trade, right? We understood the daily was bullish, weekly was bullish. So all we have to do is look for a good hourly demand zone, 4 hour, 1 hour, right? So here we had this rally base rally, clean leg in, clean leg out, strong move away, outside of consolidation, right? And this is what a picture perfect zone looks like, right? This is exactly what you want to see. If you don't see this, then there's no trade to be taken. So, in a swing trading, with a swing trading mindset, we simply just set our buy limit, our stop loss below the zone. We target, 1 to 5, or we target 1 to 3. Or if you want to hold your trade, you just target the next daily level. So the next daily level is up here. So that's why I keep mentioning to everybody that the market could go all the way up to this daily level, right? Because we did our analysis based on the daily time frame. Actually, we have 4 hour supply right here. So we won't meet any turbulence until we get to this 4 hour supply, right? So we took this trade, the signal was sent, and this trade activated, let's see, on the Tuesday 3rd, right? It hit 1 to 5 and it's still going, but we settle for 1 to 5, right? Because with 1 to 5, you only need to win 2 out of 10. So 1 to 5 is definitely enough. Above that is like you're testing yourself to see how far you could go, right? No, it's at 1 to 8, but that's just to show the mindset behind the analysis. For CAD JPY that's currently running, drop a 1 in the chat if you took this signal. The idea was the daily was in a downtrend, right? JPY in general is bearish, so all JPY pairs has been bearish. So I was looking for, with the knowledge of the higher time frame going bearish, all I did is looked on the 1 hour and the 4 hour for a qualified supply demand zone. On the 4 hour, the next zone was all the way up here. So I looked lower, I looked lower, and we had this 1 hour zone right here, but it looked better on the 30-minute. So we had this 30-minute drop, base drop, strong move away outside of the consolidation, right? So that's where I placed the sell limit right here, right? Now I also took into consideration the market reacted off of this zone right here, which was on the 15-minute, right? If we look, no, actually it's on the 5-minute. So we had this 5-minute drop, base drop that the market did react to, that was outside of the consolidation. Once the market reacts to a zone and it doesn't penetrate it deeply, it's just evidence that there's a supply and demand imbalance, right? So instead of putting a stop loss above the initial zone, I was like, okay, I'll just cover these 2 zones. So we have 2 levels of supply that the market would have to penetrate before it could hit our stop, right? So most likely we have this trade right here, and how far could it go? Well, if it's if the JPY continues to trend down, then it'll definitely hit the low, and it'll go a lot lower, right? Now, every night I would analyze all the pairs. I would do literally 30 pairs, and all I would do is just look on the daily, weekly for direction. Okay, we have a direction. Then I just look on the 4 hour and the 1 hour. for qualified supply and demand, and then I set the limit. And some trades are gonna activate, and then some trades are not gonna activate. But at least I know that we have qualified pending limits that make sense, right? Which means that overall, even if we get 3 out of 10, which we do win a lot more than that, but worst case scenario, we win 3 out of 10, we're going to be profitable, right? For example, on gold, we had basically, I was looking for sells on gold because we have this gold, right? So basically, gold for me reacted to this 4-hour supply right here, created a strong move down. The next demand would be here. We have the novice area in the middle, consolidation. This is where everybody probably losing their accounts, everybody trying to trade this shit every day, and they probably hitting stop loss left and right, right? When you're trading, you want to identify where not to trade, and then you identify where to trade. So once you identify consolidation, the market could go anywhere. It could go up, it could go down, because there's a lack of supply and demand. There's a lack of an imbalance. There's equal people buying and selling, so anybody could push the market any direction. You have to identify where there is more sellers than buyers, right? That's where your edge comes in, because more people are selling here than people are willing to buy because of how the move, because of the picture of the move. So you just set your limit, and if it triggers, it triggers, right? That's if you're swing trading, you can't look at one pair, because you'll be waiting forever for a trade to activate. If you're swing trading, you have to look at multiple pairs, probably 10 at a minimum, because you're gonna have to look at all of these pairs and find the best setup that is nearest to activate, because we don't know when this gold trade is gonna activate. If anybody's trading gold alone, swing trading, and they're using this, they could be waiting a long time. And most people is trigger happy when it comes to trading. So most people, they can't wait for the good trade to happen. So what they're gonna do, they're just gonna try to trade this, and they're gonna get wrecked, right? So since the 25th of November to now, gold hasn't presented a high quality trade on the 1 hour time frame, right? So anybody trading the 1 hour and the 4 hour, if they're using the strategy, they haven't found a high quality trade on gold for the last 10 days, right? And that's why we use buy and sell limits, so we don't get seduced into the market, right? But I'm gonna leave it right there, and I'm gonna see you guys in the chat, right?